Hello folks, welcome to this week's weekly report, Monday the 17th of May. Boy, last week we had a bit of a swing around in the US dollar. We had a lot of news coming out of the US last week. First off, we had the inflation data. The inflation data beat expectations by a country mile. Markets were going for up around 0.2, came in up 0.8% month on month, which is about 4.5% year on year. So really showing some inflation pressures. And with that, the US bond yields started to surge higher, and of course the US dollar followed as well. I'll show you that on a chart in just a few moments. Then later on in the week, we had some really soft data in terms of retail spending, actually showing a drop month on month, and the bond yields came back down again, and naturally the US dollar followed suit as well. So everything to play for this week to see where we go. Let me just show you exactly where the currency markets are looking. This is my momentum meter. I think it's essential, as I always say, that you should be using something like this when you're trading the Forex markets. It basically tells you what's strong and what's weak. And trend followers, we want to buy strong currencies and we want to sell weak currencies. So this tells a big picture. So you can see here, this is the daily chart. You can change the time frame on it, of course, if you wish. But this shows you the big move we had midweek, where we had those inflation data showing a strong read, and then we came back towards the end of the week. But interesting to note on this chart, we're still seeing some really strong growth in the Canadian dollar, which is this purple line coming up here. It is the strongest currency there at the moment. And of course, the weakest currency down here, that's the brown one, that is the Japanese yen. The Japanese yen is still under pressure as markets move from risk on to risk off. It's a funding currency. Normally when the markets are on risk on, that means when money is flying in to the stock market, normally the low yielding currencies, they underperform, and that's basically what is happening at the moment. And we are in risk on mood at the moment. Okay, let's have a quick look at what we're looking at this week. So Euro Oz, we're looking at the Euro Oz trade, pairs in the spotlight. With a key level down there at 57.40, looking for a potential short trade in there. Now these are just biases. You don't want to be going off now trading this, just selling the Euro Oz, because I've said so here on the channel. It's a bias. You've got to have your own strategy rules to make sure you time your entries perfectly and so forth. But that is our basic bias at the moment. Euro trading lower against the stronger Australian dollar. Again, a risk on commodity currency, could do better this week. We have got, of course, some Australian data out later on the week. We'll show you that when we get onto the screens in a moment. Swiss yen. Now this is the one that both these currencies are safe haven currencies. So normally when the markets are on risk on, both of these currencies come down. But what's been happening more recently is that the Swiss franc has been gaining some strength, certainly over the Japanese yen. You'll see here on this chart here, really big solid trend continuation play. It's been a playground really for the trend followers. So risk is certainly with this to the upside at the moment. I'll say risk is, the bias is to the upside. Swiss is outperforming the Japanese yen. It's been a great trending market, giving lots of entries and pullbacks. We're looking at another potential pullback for trend continuation in there as well. 120 sort of 75 zone. If it does pull back there this week, could indeed prove as support zones. But again, do your own analysis on that. I'm looking at the CAD yen long. If you've been following these videos over the last few weeks, I've been CAD yen long for a while now, and continuing on that theme as well. Stronger CAD, stronger oil prices, and as I've mentioned, the weaker Japanese yen seems to be prevailing at the moment. And Max is looking to this week at a direction short play in the FTSE 100, basically with his key levels down there at around 69.20. That's his level of interest. Of course, you can come over and discuss these opportunities with us in the live streams that we're doing around the clock. If you want to have more info on that, come over to the site here, forexsignals.com. All right, let's just jump onto the screens now, and I'll show you exactly what I'm looking at on the charts. Come on. Okay, folks, let's start off by looking here at the US Treasury 10-year. Now, the reason why we watch economic data releases throughout the calendar week is because it gives us clues into what the central bank will do eventually with interest rates, because the 10-year yield is a guide to where general interest rates will be going. That's why we always look at them as traders. This is the daily chart. You see the yields have been on a move to the upside pretty much since the US election last year, moving up from around 0.8 all the way up to 1.8, almost a percentage rise. This is just drilling down now to the 4-hour chart. Okay, so this is the 4-hour chart. You'll see back here, this where my crosshairs are. This here was when the non-farm payroll was released a week and a half ago now. So remember, the non-farm payroll showed a bit of a drop in terms of the new jobs created, and the yields moved significantly lower. Since then, the market has been pushing higher. And you'll see here, we've had a big push higher into last week. This movement here, that was the CPI. That's when the CPI came out much better than expected, up there at 0.8. Since then, we've had a bit of a decline, and that has been trading lower. So this is the 10-year yield. Now, if you look here at the DXY, the DXY is basically the dollar index, which is an index of the dollar against 6 of the main other currencies. Same thing is happening here. The dollar was increasing as the CPI came out better than expected, and as the bond yields were rising. Now the bond yields have fallen off, as you saw, and now the dollar is under pressure. The dollar's had a bit of a pullback in the last, since the Asian session, and we're coming into a level of significance. It's now fading at this level of resistance. Look here, we've made a lower high than the previous pullback, which was held at that level of resistance, and now the dollar is starting this week under a bit of pressure. As you can see there, the relationship between the US 10-year and the US dollar, and that's basically why we look at all these economic releases that are released throughout the week. And you remember, retail sales on Friday, a lot less than expected. Okay, I also want you to look here at a currency pair that I have got my eye on for a potential reversal. Not there yet, but I'm looking to see if any price action can give me clues that this currency pair is going to respect this really important level. Now look here on the right of the screen. This is the monthly chart. Let me just expand that out for you at the moment. So you can see here we are at a crucial level of resistance in the euro against the Japanese yen. We know that the Japanese yen has been a soft currency in recent times as markets have been on risk on. Euro has been running higher as well. You see pretty much we've got almost 7 candles there. That's 7 months where we've had bullish momentum in this currency pair. But we are coming into a level of resistance. So I've got my eyes on this for potential reversal. So once I see that level there on the 4-hour, I'm going to be drilling down now to the daily chart in the middle here. I'll just expand that out as well. And what you're seeing in here at the moment, this daily chart, it's an indecision candle. This is a doji candle. It's showing indecision. So the markets are definitely thinking about this level. Is it going to push on, or is it going to reverse? I'm not going to trade today's doji candle. I'm going to see what happens over the next couple of days to see if this level is going to be respected, and indeed will it open up a potential counter trend opportunity. So never trade the doji itself, trade the next candle or the following on candle from there. But it is at a key level. A break of today's low, which comes in around the 132.50 level, and if price stays below 132.50 for a couple of days, it could indicate that fatigue is setting into this currency pair and a reversal is likely, with a possible move back down to this zone down here at 130.50. So my eyes will be on this for potential counter trend trading opportunity, and price action will dictate my entries. Okay, so I hope you found that useful. Don't forget you can come over to the site here at forexsignals.com to join in our daily live streams to discuss these opportunities and many more. If that's not your thing, not a problem. I will see you next week, and have a good week.